Well, hello, investors and traders. I'm L.A. Little, and this is your weekly NeoTA wrap, where we take a look at these markets and we do it from a neoclassical perspective. Each time we're asking ourselves what happened last week and what does it tell us about the coming ones. I do the show once a week every Sunday evening. It's broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube, and it's under the channel L.A. Little. And if you haven't subscribed and you want to, just reach up in the right-hand corner, hit the subscribe button each time content's pushed. You'll get a notification. If we look at these markets, the bloodletting that began last week continued, and across the board down pretty big one more time. Look at the losses already in 2 weeks. There's news out that it's the worst start ever, and I guess that's probably pretty close, because if you look at that, 5% down per week, that's 1% a day, 10 days straight on average. That's huge. And so the market, huge discounting going on. What are they discounting? Well, they're discounting oil. They're discounting bank failures. And not so much bank failures, but failures in the energy sector, which are going to hit banks, which are going to hit other things. They're not sure how much there's going to be, so they discount it. That's what the market does. It's a discounting mechanism. Whether it's good or bad, it gets discounted, and that's what the discounting is that's going on here. Now, maybe they're doing too much discounting. We won't know that until we get farther along and we actually get more information. But until that happens, this is the discounting that's taking place. Across the world, same thing. The DAX, the CAC down 2.5% on Friday. You had 1.5 to 2.5% across the board. NDX down 3%. Now the Russell, which was interesting on Friday, the Russell actually was the best performing. Now it was down quite a bit more earlier than the day. It was down over 3%, just like the NDX ended up. But it came clawing back. And that might be a good sign, because the Russell's been leading on the way down. So that's divergence, and positive divergence at that. Bonds up another 1.5%. They're up about 2% or so on the upside this year. Oil actually shows up here as 2% gain. West Texas Intermediate closed at 29.5. So I'm not sure why that divergence between the ETN and the WTI. Oil this evening, when I looked right before I came on air, was down again. So that looks like that pressure hasn't abated. We had silver and gold up. Let's take a look at these charts. If we move over S&P 500, now you had volume expand, and this is going on in each of the charts you'll look at. So volume escalation as price comes down. And so there's nothing here at this particular point to tell us that this is done. And in fact, even though it did another under-over, that still doesn't set it up to go higher, because it can still test those lows again. Now, tomorrow is a holiday, Martin Luther King, and the markets are going to be closed. So you're going to have whatever happens in Asia, whatever happens in Europe, take stage tonight and tomorrow. And then the U.S. is probably going to gap one way or the other, depending on what that is as it comes in. And as I said, the WTI, which has been driving the action, was down tonight, and I think most of the futures were down a bit when I first started the show. But anyway, there's nothing here yet to tell us that this is going to turn. If you take this out some, you actually have a different story here. Now again, this is on a weekly. You actually tested those lows. You tested it on slightly less volume. So you actually have a test failure to the downside. And that comes after quite an extension to the downside. And so it's not abnormal at all. Matter of fact, you would expect this to hold for now, because it's extended on the way down, and you got big volume down there as you're trying to break through it. So it's going to be hard to break through this. Of course, 2 weeks ago, we should have had a day up. We didn't get it, and it's been nothing but down since then, and that was in Europe. If you remember, not last week, but the week before on Wednesday, I believe, the setup was to go higher. It did not. I called it out the next day and said, hey, it's not what it should have done. Anytime it does that, we should take note. And boy, did we ever need to take note, because this thing just sold off hard day after day ever since then. So that's the weekly. If you look at this on a monthly, if we pull it over, you know, you're down here testing these lows. So you got the lows from August. And folks, if we do break through these, whether it's now or later, the next test is the October lows, where a lot more volume sits and is going to be eventually a target at some point. You know, when you get these high volume lows, usually the market comes back. In other words, a high volume and nothing ever tests them. If you go back here and look, here you had the test on that bar and it reversed and headed up, and then that started the long run higher, right? So you had high volume but tested. So you go down, you can't drive it lower, and you flip it around and you go up. Right now you got a high volume bar out here that's never been tested. That's going to get a test at some point, and given the way these markets are set up, I wouldn't be surprised to see this thing bounce up, right, get some sort of a lift, and then come down to test again. I mean, to me, that's the way these markets have set up at this point. So that's the S&P 500. If you look at the NASDAQ actually is the same thing. You got escalating volume, escalating price to the downside. You go to the weekly. NASDAQ has farther to go to get down to that high volume low. And if you go to the monthly, it's the same thing. That's where the volume is, and then the October lows as well. If we move over, I want to show you that Russell. That Russell actually got volume to the downside, expansion, right? But if you look at it on a weekly, there's nothing here to tell us. And if you look at it on a monthly, it's underneath that swing point low. So one of the reasons it probably had that positive divergence on the week, on the Friday, was because it's so extended compared to everything else. Now, will that lead to some sort of a snapback rally? I'm not certain, but it certainly looks like that's probably what's trying to happen here. The key test on this over the next 2 weeks is to get back over this bar. If you can't get back over this bar, right, that's going to be a break on the monthly time frame. A break on the monthly time frame is a big deal in my view. And if it does that, you know, that tells me that there's a much higher probability that what we really have finally is some sort of a larger top that has formed up here, right, and is rolling over, and we're going to see something to the downside. One last thing I want to point out while I'm on this chart, and let me grab the tool here again, is if we look at this, you got an ABCD down, and that completed on Friday. That's another reason this probably popped back up and had positive divergence. The ABCD structure of a downside is done. That says this thing wants to try to lift back up, and so we'll see if in fact it can. So that's the indexes on the U.S. markets. Let's take a look overseas.